Good evening, everybody. Thanks very much for joining us again. This week, I want to take a look at, again, sort of hark back to the basics of technical analysis, but just look at how we can use technical analysis to complement your trading technique and your style. And I want to take a look at how we can use support and resistance and how that develops into trends. But first of all, I just want to take a very quick look at what actually is technical analysis. And basically, it's a trading discipline that's employed to evaluate any asset class, any investment. And we can use price action to establish where directional risks are beginning to develop. And it helps us identify trading opportunities by using price trends, patterns that develop on the chart. And as we get more and more experience by using these patterns, then we can have a greater feel for what's actually happening within the market and how we can anticipate and develop price activity. Now, technical analysts believe that by using past trading activity and changes in price, can be valuable in actually determining the future price movement. And that's very true, but it's very important with what is actually happening now and what is actually going on within the market at this time and how that relates to past historical data as strongly as looking back at just how the market has traded previously. Now, there are various types of analysis of markets, and one is fundamentals, the other is technical analysis. Now, a fundamentalist looks at an economy and a company by actually studying its financial background and establishes where the risks are likely to be within that asset class. While a technical analyst looks at the psychology behind what is actually moving prices, and they study the sentiment. And that leads to us being able to gauge the supply and demand within price activity. Supply is where there's more selling and prices decline, and demand is where there's more buying and prices will then rise to reflect that more positive feeling within the market. Now, in the last video, we looked at candlestick charts, and I want to look at how that developed into sentiment changes. This week, I want to look at support and resistance and how that develops into trends. And we're going to be studying and looking at the US equity indices predominantly and how they've established that type of price action that we're currently seeing. Now, what is support and resistance? Well, support is where, for say, we're in a downtrend and prices are falling because supply, the selling pressure, outweighs demand, the buying support. So if there's more supply than demand, prices will fall. Now, what happens within this downtrend is that the lower the prices go, then they may become more attractive for anybody that's on the sidelines looking to buy that stock or asset. And so as prices fall further, they may be tempted to become more active within the market on the buy side. Now, in time, as more and more demand begins to build, then that begins to match the supply, the selling pressure in the market. And it's at this point that prices will stop falling. And this reflects balance within price activity. And that level where the market has stopped falling marks the support point. Now, support can be a price level or it can be a price range, but it's a consistent area where buyers are active within the market, holding selling pressure or supply, and reversing it to see more demand beginning to develop. And then that shows the buyer's willingness to get long of a stock or asset. And then if that demand overwhelms supply, it's then that we start to see the decline being halted, reversal, and price developing into strength. So the support point has prompted that fresh upside. When we look at resistance, it's obviously the opposite of support. And it's where we start to see there's more demand than supply and prices move up. As prices move higher, selling pressure that's tempted back into the market by these higher levels will show and reflect and begin to overwhelm the desire to buy. And this can be for many reasons. And this resistance level that's been established can be for any number of points. Perhaps traders feel that prices are too high or their targets have been met. so they're prompted to sell the market and create more supply and increase the significance of the resistance. It could be that buyers are unwilling to initiate new positions after such a strong advance, and that they feel that prices are hitting overbought levels once more, from which the market needs to see some sort of correction. But by actually plotting this price activity on a chart, technical analysts can see at which level this supply in an uptrend or demand within a downtrend is beginning to overwhelm the dominant trend, and whether or not that's starting to see price activity reversing and developing a new trend. So I know I've said that I'd look at the US equity indices tonight, but I couldn't resist adding this chart of gold. Now, this is a weekly chart of gold, but just to reflect how important resistance has been for gold of late, and this is up to last Friday's close. But you'll see that as last week approached, the August 2020 and March 2022 highs, and did actually attempt to break through that, you can see that the resistance in this area has once again prompted a very sharp sell-off, a lengthening upper shadow, confirming this range as a very important resistance point and an area that needs to be broken to trigger a more sustained upside move. So again, it's this range, this resistance range, that we'll be monitoring if prices see further strength, with the need to break and close above this level to trigger a more significant move to the upside and to confirm that the resistance has been broken. Now, when we come to talk about trends, there are basically three trends that any market will be in at any time. It could be sideways, it could be an uptrend, it could be a downtrend. Now, when we look at a sideways trading range within the US 500 index of late, we can see that there's a consistent level of selling pressure or supply within the market from which the level has attracted fresh selling pressure. But more significantly, there's been an area of an uptrend that's been holding recent lows. So any setback has found support around the previous extreme to confirm this as a support area. Now, these lines could be horizontal and reflect a consistent support and resistance level at the extremes, or we can see them converge as we have in this example. But when we start to break out of this sideways range, it creates a more significant reversal within the sideways trend. The upside break reflects positive themes and the potential to move within an uptrend. Now, when we look at this sideways trading activity within the current chart up to last Friday, we can see that it resulted in a very strong upside move for the US 500 index, having broken out of this choppy sideways trading period. So the support and resistance levels were critical in highlighting that trigger point. And when we look at current price activity, we could argue that the US 500 index is trading within a choppy sideways trading range, with the recent highs marking resistance, the recent lows marking support, and we'll be monitoring how the defense of these levels is seen over coming days and weeks, with the breakout perhaps reflecting more positive or negative themes beginning to develop within the market. So we've established a sideways trend. How about we look at an uptrend now? And this is the US Tech 100 index back from March 2020 through to the end of 2021. This is a weekly chart. So you can see that we're trading within a positive trading condition, an uptrend. Now, this is where, instead of the buying support being at a consistent level to the downside, we're seeing buying support developing at a higher level each time. So we're seeing an uptrend beginning to reflect price activity, especially as the market then breaks above the previous high to reflect the ongoing positive pattern. So the uptrend is a series of higher highs and higher lows. Now, you can draw trend lines that connect the lows to highlight the support point. But for me, I think it's more a fact that it's this pattern of higher highs and higher lows that's significant in determining the bullish trending condition. Now, again, in the weekly chart, if we expand this to the current trading activity, we can see the strong uptrend that was developing within that period of time, where buyers were being found at a higher level each time to break above the previous upside extreme, to reflect bullish sentiment and an uptrend. And you could argue that the current activity within the US Tech 100 index is now posting a bullish trend of higher highs and higher lows. Each setback is finding support at a higher level each time above the previous correction low, and then breaking to higher levels, breaking above the previous correction point where we started to see resistance and the supply beginning to build to create a setback. So the uptrend is a very strong bullish pattern. When we look at a downtrend, we can see that on the US 30 Wall Street index, that this activity between August and October in 2022, last year, we started to see more negative themes beginning to develop, where we had lower highs and lower lows developing and prices making new downside extremes to extend the downtrend as supply outweighed demand on a consistent basis. In other words, highlighting negative sentiment. We then actually went into a period of sideways trading activity where previous highs acted as a resistance, previous lows as a support, and then the breakout materialized to develop into a bullish trend. So by reflecting these trends and analyzing price activity, we can see how the negative sentiment within a downtrend changes to more balanced themes as a sideways trading activity forms. The breakout then occurs to the upside to create an uptrend within price activity. And if we look at the current trading chart for the Wall Street index, we can see that actually now it's a little bit more confusing in terms of price activity. Yes, it's a sideways trading activity, trading range beginning to build, but it's a very choppy and uncertain trading pattern. So again, this is something that we would need to monitor more closely for breaks of resistance or support levels to potentially trigger the next significant move. So that's me for this week. Thanks very much for listening. I'll be back in a few weeks' time when we'll look at something else within technical analysis. Thanks very much for joining us.